So here we go, we're going to get back onto some proper stock market videos, and today I'm going to do my US stock market portfolio review. I did my UK portfolio I think last week, so if you want to see how the UK stocks are doing, go check that video out. But these are all my US stocks and we're going to see how they are all doing today. Now the reason why I do this video is for transparency, so you guys can see what I own, even though I do tell you on the stocks I'm buying videos every month. But you get to see my whole portfolio here now, what's up, what's down, the position sizing, and like I said, it just keeps with that transparency so you can see what's going on. I do it every 3 months on the YouTube channel, so the next time I'll do this is November. And if you want to see it every month, I actually do it on the Patreon, which you can join through the link in the description. But like I said, the reason why I do this is just to keep the transparency up. I've done it for I think nearly 8 years on the YouTube channel now, so it's been a long time, whereas a lot of YouTubers sometimes show the portfolio and then when it goes through a bear market they don't show it, or they start a new portfolio in a bear market. This is a proper stock market portfolio, guys. It's been around for many years and you've seen all the time in the markets, whether it's bullish or bearish, what is going on with the portfolio. Anyway, let's get started onto this, how this portfolio is doing. So like I said, if you do want to see it every single month, join the Patreon, links in the description, only £5 a month, and also you get 2 exclusive videos a week on there. So for example, the members of the, so you get the Discord as well when you join the Patreon. There's about 500 members on the Discord, and you get to see the exclusive videos on there, like Ultra Beauty. This is on the stock request where members of the Discord vote for me to take a look into a stock. This week it was Ultra Beauty, and also something like an earnings review. We did some earnings reviews of the companies that reported last week and the week before, and like I said, you get the Discord where there's 500 members on to talk about stocks, including me, every single day. Links in the description, guys. You support the channel, thank you for all you guys that are Patreon members. So the portfolio is split up into 2 parts, so I've got 2 portfolios. The reason why is just to diverse the money a little bit rather than having it tied up in one platform if anything was to go wrong. There's a little bit of security there, that there's some wealth protection going on between 2 portfolios. And as well as that, I used to use a different broker for the first few years I started investing, and then the other broker that I used started offering ISAs quite recently. Well, I say recently, I'm talking about 4 or 5 years ago now, and I started investing with them guys as well. So these 2 portfolios, sometimes people go and only like stick around for the first minute and they go, hold on, where's DraftKings, where's HIMS, have you sold it all? And they don't realize, because the other portfolio where I keep some of my stocks, that comes up in about 5 or 6 minutes time. So let's start onto this portfolio here. So at the top we've got some Alibaba. All these prices were taken from Thursday, just so you know. I was going to make this video on Friday, but then I decided to make the video on Friday. So yeah, that's when all the prices are taken from. Alibaba, yeah, I'm surprised to see they're still down at this $83 range. It's not really done anything for a while. It's basically stayed flat since 2022-ish, so it's not really done anything since that time frame. But yeah, I mean, was it 9 times forward earnings, 2.4% dividend yield? The earnings haven't been that bad at the moment. I wonder when Alibaba's going to start kicking on, because I think the numbers have been okay and the valuation is definitely attractive. And yeah, I've obviously owned it once in 2018, sold that out in 2020, and then started buying back in like 2021, but it hasn't really done much since that time frame. Next one, Celsius. So I have started buying back into Celsius. I used to own this one in 2021, 2022, started buying this during the bear market and made a lot of good money on it, and then I've started buying back in the last kind of 12 months. I was up a lot in this position. I was up over 50%, and then it's actually fallen down quite a bit since that time frame. Since the all-time highs of $92, it's actually fallen around about 56%. And I think that this is a good valuation. I mean, it's 39 times earnings for a company growing at 23%. Its next closest rival, Monster, is, you pick that up for like what, 28 times earnings, and it's only growing at 2%. Yeah, either one of them's massively overvalued or one of them's massively undervalued, and I think Celsius is undervalued. I think it's a good stock at the moment to be buying. Next one's Meta. I've had these shares for a while. I think I've had these Meta shares since like 2018, 2019, up 225%. What a performer that has been for us. Yeah, we're down 67% on, but we have received the special dividend from Huya, and we're going to get another special dividend just announced on the recent earnings. We're going to get another special dividend of, I think it's like a 25% yield on the current share price, which is crazy. So even though we're down 67%, by the time we get the special dividend, we're probably more towards like 40% down on the position. Doing a share buyback, obviously they've been wrecked with a lot of Chinese regulations. We had the ban on gaming, tipping, Advertising got a little bit weak, and there was another one. Oh yeah, the merger got stopped. So they had 4 things actually that were out of their control, really hurt the business. But saying all that, the company's actually still doing okay. They're cutting costs quite well. They're still managing the profitability. The growth is coming back in the advertising part of the platform now. I think Hugh could start turning into a bit of a buy again maybe next year if the advertising is still very strong. So watch this space with you, we'll see what happens there. PDD, we're up 7%. I don't know how we're up 7% because this stock should be up a lot more. This is where sometimes the stock market gets a little bit frustrating because you own a business, the business goes to a very good valuation, which I think PDD is currently, 11 times forward earnings? Yeah, 11 times forward earnings. And yet the company is forecast to grow 67% this year, and the EPS is supposed to go from $6 to $12, and yet it's 11 times forward earnings. It doesn't make sense. This is where it's frustrating because that PDD position now should be up probably like 50 to 100%, and it's not. It's going to do it sometime, hopefully. But yeah, I don't know how that is only up 7%. Microsoft, we've had that one in the portfolio for like a good 6, 7, 8 years now. My first shares I started buying in Microsoft were like $60 or something like that. Maybe even $80, $70, $80. Anyway, it was double digit. And we've averaged up a little bit. We sold off half the position, I think, in the time frame that we owned it. It was the largest position in the portfolio. And these are shares that I might just end up holding forever, being a very good performer for us. We've got some PayPal in here. This isn't all my PayPal, but I do have some PayPal in here that's up 17%. We've got some Starbucks up 13%. Obviously, the exciting news of the CEO change that's going on in Starbucks, I think that was very much needed, and it's been on a very good run in the last kind of last 5 days, up 23%. So I think next time I had to buy Starbucks was like in the $60 range, which is obviously quite far away from where we're at the moment. So we'll see what happens with Starbucks going forward. I'm happy to kind of just hold here. Visa, we're up 66% on. I've got to rerun the numbers on Visa at some point. I think that might come a buy again at some point soon. Disney, we're down 21% on, which is actually quite surprising because Disney's numbers have actually been quite impressive at the moment. And Disney, I think, might be a stock I have a nibble at some point soon. S&P 600 ETF, so that's the only ETF, that's the only index I own, is the small caps, because I think the small caps are undervalued. We're up around about 12% on that position in the S&P 600 ETF, and that's all the stocks in this portfolio. I think it's absolutely smashing it. This portfolio is on fire. Obviously, when you take out the, we actually just released Celsius for a good profit only 12 months ago, and obviously we're buying back into it now. When you look at some of the performers in here, it's going really well. The only thing that I'm not really considering selling anything. The only thing that I'd probably buy is maybe a bit more Disney in here, and that's it. At some point I need to have a look at the numbers on Visa, and then go on to the next one. So if we have a look at the next portfolio, we've got some more Alibaba shares. We've got a little bit worse average on this one at the moment, but I'm sure it'll work it out. Google, we're up 46% on. This has had a bit of a pullback recently. If you look at the stock chart, you can see the pullback that Google's been on. Not tempted to buy though. I would buy Google at like the $110, $120, so it's got a fair bit to drop off before I'd buy some shares. In fact, if anything, I'll let you guys know I actually did sell some Google shares about 2 weeks ago, just to take some profit off the table, because I think the stock is pretty fairly valued right now more than anything. So yeah, if it can drop, that'd be perfect, because I'd like Google to be the largest position in the portfolio, to be fair. Obviously they've got the kind of antitrust, about the split up potentially going on at the moment, but if anything, that'll only help Google, I think, in my opinion. DraftKings, we're up 16% on DraftKings. This has had a big pullback, and we were up 50% on this position, or even a little bit more than 50%, but it's had a big pullback, as you can see here, down 38%. It had a little bit of a jump in the last couple of days. It does, by the way, it doesn't have, I think there's been a bit of a rally in the last couple of days, and that's not factored into this price here, so it might be up a little bit more than this, actually, to be fair. But it's had a bit of a pullback. If it wasn't for the pullback that it's been on, the stock was up a lot, and it's had that little bit of a reality check in share price. The fact that DraftKings is only up 1% year to date is crazy to me, because the stock has been absolutely on fire. So we'll see what happens there. If I get the chance to buy more shares at DraftKings, I never thought I'd say that, but if I do have more chance to buy shares in DraftKings at $20, I might consider it. D-Local, this is a bit of a new position in the portfolio, so I've not really built it up yet, but got stung a little bit. They came out with a bit of a profit warning, spent a lot on investments in the business, and the revenue growth wasn't there because of devaluation. Hopefully devaluation currencies sort itself out and then the stock goes up from there. I think it's still in an okay place. I think the last earnings were actually okay that they actually brought out last week. And yeah, I'm not buying at the moment. I'm just waiting for another quarter of good numbers, and then I might buy some more D locals. So yeah, we'll see what happens there. EHang, a spec play into drones. So we'll see if that in the next 5-10 years ends up being a 10x, well, even 100x or a bust. Meta shares, so these are the more recent shares I've been buying. They're up 154%, which is really nice. Topgolf Callaway, they're actually having a bit of a tough time at the moment. The numbers haven't been as good at the moment. The consumer's getting a little bit weak and it's affecting them. I still think they'll be okay. I still think the stock should be probably higher value than where it is right now when you consider Topgolf, Callaway and Jack Wolfskin. I mean, alone, Topgolf is worth 2 billion alone, and the company's valued at 2 billion, which is just crazy. The frustrating thing with Topgolf is that when this company was on fire in 2021, 2022, 2023, this company, like I said, it just didn't seem to get valued correctly, and I probably would have sold out if I was up on the position, and now we're down on the position in this weak environment. And even now, I'd even say, even though the numbers have been a little bit weak, I don't think it should be down at these sort of levels. So it's been a frustrating time for Callaway at the moment. So we'll see where that one levels out at. Hims and Hers were up 152%. Obviously, this has had a bit of a pullback, and we were up 280% or something on the position, but we've had about a 37% pullback since June. People are panicking about it. I won't panic about it. We're still up 61% year to date. You look at the earnings, the last earnings were absolutely amazing. EPS beat, revenue beat, the guidance hike up was absolutely insane. I think too many people are focused on this GLP-1 at the moment. Even without that, the company grew up 44%. Yeah, it's just having a pullback, guys. You got to accept it sometimes when it's a growth stock, and I'm sure in the next few years this will still carry on absolutely smashing it, as it already has done. InMode, we're down about 28% on InMode at the moment, and yeah, I say again, I think a lot of people are panicking over InMode. I personally aren't panicking at the moment, because you look at the company, they're still making 144 million a year in profitability, which is absolutely insane. I mean, that puts the company down at 9 times earnings. Yeah. Same again, weak environment, high interest rate environment. No one's going out and buying the machines at the moment because of the high interest rates. Granted, the management team have made a few mistakes here. They should have deployed more to a share buyback. They should have used the capital as creating a bit of a loan business, so people could buy their machines on low finance interest rates. That's a bit of a poor mistake by InMode and their management team, but the company's still throwing off good amounts of profitability, and as soon as these interest rates go down, and if the growth does come back, even if it's like 5% a year, I mean, analysts are actually forecasting more than 5% a year, aren't they? They're actually expecting over 10% a year. If they're doing 10% a year at these levels, yeah, this will very quickly turn around. So yeah, don't panic. You know, if you thought InMode was going to survive this higher interest rate environment, you're absolutely crazy. So yeah, it's a bit of a tough time at the moment, but it'll bounce back in a lower interest rate environment. Do not worry about that one. But I remember the days when we were selling InMode out at 400% return. So we've definitely had a good days with that one. Lululemon were up 4% on. It would help if I could spell Lululemon correctly. Yeah, that's a recently new position here. I probably won't buy any more Lululemon unless the stock falls another 20% from here. And they're due their earnings soon, actually. So we never know with that one. Planet 13, we're down 87% on. We're saying again, it's a spec play into the MJ space, so that'll either be a bust or a 100x in the next 5-10 years. So a bit of fun money there. Mercado Libre are up 75% on. Yeah, this company's absolutely smashed it since we have been buying some Mercado Libre shares. I think even year to date, yeah, it's doing all right year to date. I mean, I don't know if you had a look at their last earnings from 2 weeks ago. Amazing. I don't know which had the better earnings of earnings season. I don't know if Hims was the best of earnings season or Mercado Libre's. Mercado Libre's, I mean, they beat by EPS by $2. They grew 41% year over year, and it's 54 times earnings. It's actually probably a little bit lower than that when you actually take the beats in the EPS they're currently doing. Yeah, absolutely amazing business. And I can only see this doing very well in the next few years. I think that this maybe should be a contender to potentially come I mean, it's already like a top 5 holding, but even a top 3 holding, I think, in the portfolio. SoFi, we're down 2% on, which is, once again, this is one of those ones that we talk about, which is like a PDD. Frustrating because realistically, should this be down 2%? Probably not. This is a position that should probably be up 30-40% right now because the numbers they're doing are absolutely fantastic. So I'm sure it'll get reflected someday. PayPal, we're down 9%, down 6% on this position, but the stock has been on a fantastic run recently. We've got some evolution. Same for this one. I think this is going to, it's one of those where you blink one day and then you're up 30-40% because this company has done absolutely amazing. This is a stock that is also on a bit of a pullback at the moment, and if we have a look here, yeah, it's really peaked since 2021 and it's actually down 27% since that time frame. But if you actually go from the financials of 2021, if we actually go on the past performance on Simple Wall Street, let's have a look here. Yeah, 2021, yeah, since that time frame the revenue has basically 4x'd, and the revenue has actually the profitability. The revenue is 4x and the profitability is basically 4x'd in that time frame. And if anything, the growth just continues to happen, and yeah, it's a good valuation for the growth as well. I mean, you know, this is paying 17 times earnings for this is crazy, and you're also getting a 3% dividend yield as well, which isn't bad at all. So yeah, this is definitely a very attractive stock in my opinion. Shopify, we're up about 4% on. Very, very good company, one of the strongest moats I think out there. This one here is a brand new stock that I bought last week. So I only bought this stock around about 4 or 5 days ago. So I'm not willing to reveal it yet on the YouTube channel. Obviously you guys on the Patreon know what stock that is. I'll probably reveal that on the YouTube channel in maybe a couple of weeks time. And then we've got some Disney as well in here, and some Block as well, which once again is stock that has done very well, and I don't know how it's not up more than, well, I don't know how it's down. It should be up because that's brought out some really good financials. So yeah, overall in this portfolio, I'm really happy. The only thing I'd like to do is maybe bring the position size in, the amount of holdings down by like 2 or 3 positions. I think I'm a little position heavy, but at the same time, by now I thought that the likes of Square and Topgolf would be like really kicking on, and maybe I would have sold them, and they haven't. That's probably where that issue has kind of come from here. But yeah, I would like to maybe reduce the position slightly, but I'm not going to force it if it's not at the right value. Yeah, really happy. The only things that I'm considering maybe buying is I might buy some more SoFi. I'd say PayPal, but probably not at these levels. It would probably have, you know, it's been on a good run recently. Evolution potentially, Disney as well, and maybe the new stock if it goes down a little bit, maybe some Block. So those are the really ones that are at attractive valuations where I might buy at the moment. So apart from that, yeah, I'm really happy with how the portfolio is doing. The portfolio since that bear market crash in 2022 has really kicked on. The portfolio is performing very, very well. There's a lot of big winners in here, and I'm sure in the next few years, as a lot of these financials continue to do very well, it'll only do better and better. So yeah, really happy with how the portfolio is doing. It's doing really well, and that's how it's all going, guys. Obviously, like I said, I will update you guys in November after Q3 earnings, how everything's going. Apart from you guys on the Patreon, obviously you guys will see the September update in probably around about 2 or 3 weeks now. So you get the more regular updates there, guys. And obviously you get to know what every single stock is after I bought it in real time. Anyway, that's the video, guys. Hope you enjoyed it. If you could, hit the like button. Apart from that, I'll see you in a bit.